Jewelry retailer Titan is expected to post its Q1 FY22 numbers. Obviously, optically, it's going to be a strong set of numbers given that there was a low base last year. Last year was the first year when we saw that the pandemic hit the country, and retail was one of the spaces that was the most impacted, as sales were absolutely zero in April and May, and then they slowly started seeing recovery coming in June. Now, obviously, this time also we are seeing an impact of the second wave. The second wave has surely impacted compared to the previous quarters, but it's the recovery that the company is seeing is faster than what it saw last year, is what Titan has highlighted, and this had come in their operational update. Now let's look at what we can expect in terms of numbers. Revenue is expected to see a 55% growth on a year-on-year basis, obviously supported by the low base. In that, when you look at jewelry segment, which accounts to around 80% of the business, is expected to grow by 107%. Watches and eyewear division, which accounts to around the remaining portion of the revenue, is growing by 280% and 117% respectively. In terms of the bottom line, we are expecting a loss this time as well, but the loss is much narrower, 29.8 crore versus 270 crore. Sequentially also, there is some bit of a pressure because of the second wave coming in on the company, plus delayed wedding season also in April and May had been postponed. So that is also something, maybe the buying may have been delayed in the coming quarters as well. Now, moving forward, when you talk about the operating performance of the company in terms of the EBITDA levels, we are expecting the company to break even, marginally break even at EBITDA levels, and we are expecting the EBITDA margin to come in at 1.9% this time around. Last time we had seen an EBITDA loss, so obviously the margins were negative there. Overall, in terms of the Q1 update, the company has also highlighted that the network expansion plans for the company had gotten delayed. This was in the jewelry segment, mainly due to the second wave and the lockdown coming in. So yes, that could also see an impact coming in there. We could maybe watch out for more details and commentary coming in on that factor. Other than that, the company has highlighted that, we could see a sales recovery which is faster, and it is than last year levels. And obviously, the company said that they are seeing sales recovery is gradually improving across their businesses and across segments. So surely that surely shows indication of at least some bit of positive sign. This time also, revenue contribution from May was very marginal. Only a 10% revenue contribution this time was from month of May. April was 50%, while June was 40%. So there is signs of recovery that is seen even in the revenue contribution in April, May and June. So April 50%, May 10% and June 40%. Overall, what are the factors we'll watch out for? Commentary in terms of the impact due to second wave, how is the recovery shaping up, outlook on the watches and the eyewear business, the jewelry segment EBIT margins, as well as lastly the inventory levels is something that we'll be keeping an eye out on as well.